While I have a high level of conviction around what assets will go up in the next 12 to 18 months, I urge you to really pay attention to some of the risks in investing in today's market. In this video, I'm going to cover off things like off-the-plan properties, as well as everything like cryptocurrency and what you should be paying attention to rather than the clickbait articles that you're reading online and all the fear that's in the system. If you're interested, keep watching. Hey guys, my name is Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, if you are after help around buying property and how you can go out there and build a property portfolio, definitely contact me. I run a buyer's agency called Search Property. There's a link in the description below, as well as a pinned comment. If you want to email me, contact me, whatever, we can have a chat. We're in a really tricky situation at the moment where you may personally feel fairly positive because, prices have come down across the S&P 500 as well as cryptocurrency. You might have some confidence around starting to invest now. But if you go online and you look at articles as well as what thumbnails are popping up, it's all about fear. There's a lot of red coming out. It's because everyone's scared. And the truth is, when you're scared, misery loves company. So you all work together and you go,
well, if I'm feeling scared and you're feeling scared, that's fantastic because we won't do anything together.
Now, again, you've got to look at your own risk appetite and understand what your time horizon looks like. Because if you're someone listening and you're 23 or you're 28, it's going to be very different to investing versus someone in their 60s. So let's jump into a few of the risks that I see in this market today, and I can't believe I have to say some of these because people are still making the same mistakes. I've literally had emails around this only a few days ago, and it's what's prompted me to make this video now. Number one is avoid off-the-plan properties. What is off the plan? Essentially what it is that you're buying the property based on a set of papers suggesting that this is what the plan is to purchase a property. Hopefully that made sense. Essentially, you would be most familiar with it when it comes to apartments. High density living, where people are going and showing you really nice pictures where it's all artist impressions, and that's where they go and say, look how nice this property is, but it's not built yet. You also can't visit it, and it's going to be built in probably about 2 years. But you should put a deposit down, and then that way, as the market goes up, your property value goes up. And this is the sales pitch they're basically going to use. Look at how nice this property is. It's brand new, which means you don't have to touch it from day one. Not only that, but because it's brand new, you'll get some really good tax benefits. I'm sure your accountant loves that. And in terms of cash flow, it's actually pretty good cash flow. It's about 5%, which is not bad for a capital city. What they don't tell you is about the strata fees, because there's an amazing gym and there's a rooftop bar as well of some sort. But, let's not focus on the negatives. They'll go on to tell you that the biggest sale point for an off-the-plan property advisor is that if you buy property today, you only need to put a 5% deposit in and let the market do its thing. The market is going to obviously go up. And then in 2 years' time, when you decide to settle, you've only really put in a 5% deposit to realize all of these gains. That's the power of leverage without actually leveraging it with a home loan. And when you actually have to take out a home loan is when it's actually complete. So it's no risk to you apparently, but here's where I'm going to tell you, be really aware of what's happening. This tactic might work out quite well when there's certainty in the market's going up, it's a pretty good time. Now, an example of this would have been purchasing something in 2019 off the plan that settles in 2020. Buying something in 2019 for the forward date of settlement at around 2021. If you bought in a capital city in that situation, in a good location, you probably would have made money. However, when you go ahead and purchase property like that today, you're in an environment where interest rates are hiking up, which means your borrowing capacity is unknown. There's uncertainty around what you can and can't borrow in 12 months time. And guess what? If you go ahead and you put a 5% deposit down on that contract, in 12 or 24 months when you actually have to settle and you can't get a loan, guess what? You lose your 5%. Okay. They didn't tell you that, did they? And that's the risk that you take on. The other part to this is that you don't know what the demand looks like in 12 or 24 months. Most people that purchase this type of property aren't experienced investors. Now, yes, you'll hear the odd story of people making money, but I would prefer to limit my risk, have sustainable growth, and be in control. If I go and purchase a property that exists today, I can control the narrative. It means I can increase the rents if I wanted to by renovating, I can increase the equity, and I also have historical data around that type of asset in that location when it comes to rental as well as capital growth. A common thing that most people overlook when it comes to off-the-plan properties is they only ask about that tower itself. So let's say, for instance, you go out and buy an off-the-plan property, an apartment in, say, a 20-story building. You're probably going to ask, hey, how many units are in here? And they might say it's 150 or 250 apartments. What most people don't ask is what else is coming up here? And that's probably what the real estate agent or the advisor is not telling you. It could mean that you're probably building a property right now, but there's probably 3 or 4 other towers that are also going going up over the next 3 to 5 years. More supply means the prices won't move. We're seeing this in many parts of Australia as well as Sydney and Melbourne, which is believed to be really blue chip areas. I had someone reach out to me last week and they told me their situation, which is that they bought an off the plan property in early 2020. They're due to settle in 12 months time. They put about $80,000 towards the actual purchase. It was all of their savings. And now they're in a situation where they're checking every month with the broker to see if their borrowing is going to pass. And they just got to the point where it doesn't pass anymore. They're very scared. And unfortunately, that's one of the risks that I feel like I need to express to you guys because I do value the time that you spend here. If you guys have learned something new, smash that like button. Now, keeping on theme with real estate, what is the other type of asset that you get advertised most for? I'll let you think about it for a second. It's a house and land package because that's the next best thing. When you can go out and get into a growth corridor because these locations, unfortunately, nobody else knows about, is in the middle of nowhere and you're effectively going out there buying pieces of land to then eventually go and build on. One of the major things that gets often overlooked is the fact that you don't know when the land's getting registered. Now, in some cases, the land might be already registered with the council, which means once you buy, you can go ahead and build something. But in some cases, you'll have land that's unregistered. It's very important to pay attention to this because what this means is that they actually don't know when you'll be able to go and get that registered to then eventually go and build. I've heard cases where people have bought the land hoping they could build, but it's unregistered and they got told it will probably take 8 months. It ended up taking almost 2.5 years before it got registered. And by the time that happens, imagine what your situation looks like. Think about 2.5 years ago. What job were you doing? How were you doing with your finances? And where were you living? These are such crucial things, especially now when we have so much more movement. The speed of information is so much quicker and the speed of money is also quicker. So in that time, you're probably just awaiting this land to be registered so you can get a construction loan to be able to build a house. But if it keeps getting delayed, it means you can't do anything. It means that you're sitting there and saying,
well, I can't buy an investment property because that'll affect my borrowing and I want to wait for that construction to happen until I make another move.
And that could mean another year or 2 years out of the market. Another thing I'm going to say that is quite controversial is if you're buying property simply to reduce your tax or for tax benefits, you're doing it wrong. You're going to lose a lot more money by implementing that tactic rather than having a proper strategic plan where you're going out and buying good quality properties on good fundamentals. By buying properties simply for reducing your tax is effectively you saying, I don't want to make $1 because I don't want to pay 47 cents. But what you don't realize is you're still keeping 53 cents. So in that case, I would rather go ahead and make the $1, pay my 47 cents because I'm still getting ahead by 53 cents. And that is on the highest tax bracket. So think about real estate with fundamentals and then any tax benefit you get is all bonus on top of that. Another major risk you might come across investing in today's market is being so attracted to some prices when it comes to cryptocurrency as well as shares is that you want to go and put all of your money in at the same time. And what happens is you buy the dip and the dip keeps dipping. And that's where you don't have enough money left in the bank to go and buy some more at lower prices because you believed that was the lowest it could go because someone on Twitter suggested it might be. And then you're in a situation where you're now in negative equity territory, which means the money you put in, let's say it's $50,000, is now worth $40,000 and now you're stuck. You can't do anything with it. And most likely when you sell is when the market's going to go back up. It's just how it works sometimes. So to avoid a situation like that, and despite the prices being so attractive on some assets right now when it comes to crypto and stocks, I have a plan to DCA into the market. You've heard this concept before, not just on my channel, but many others talk about it, is dollar cost averaging in. And so for me, I have this set up with an auto invest when it comes to Binance. So for all my crypto, I have a plan set up with the auto investing feature and I'm able to go out and just continue buying up and it doesn't matter what the price is. Some days it'll be higher, some days it'll be lower, but my average price will be lower over the long term. This takes out all of the emotion around purchasing and then hoping it goes up. But in reality, I'm purchasing with a 5 to 10 year plan in mind when it comes to cryptocurrency. So I'm okay going out and putting a certain amount every single week or every single month, depending on when you're getting paid. And that allows you to continue investing and being in the market. Then in addition to this, you can actually go and earn money through Binance Earn. I'm going to leave a link in the description below so you can sign up. You'll be able to get a sign up bonus. I'll leave a video card up here so you can go through and set up a Binance account with yourself here in Australia. And although there are so many other risks, I think this one by far is the most important: inactivity. And what I mean by that is the market's continuing to move with or without you. It doesn't matter what your feelings are. They don't care about my feelings. So you effectively sit there, absorb all this information. Now you have analysis paralysis, which means too much information, not enough action. And then that forces you you to be out of this market for an extended period of time. This is by far the biggest risk when it comes to assets and investing. When you're going out and accumulating assets, you should be going out there and be on the offensive. And the reason you might not be able to is if you don't have emergency funds, you don't have income streams that are coming through, and you're insecure about the market going lower. If you're feeling insecure about these sort of things, you need to have a strategy in place. What you might be focusing on is the short term, and the short term volatility will shake everyone out. But if you can invest when you can actually invest, then you're going to thank yourself in the next 5 to 10 years. Take for instance, real estate. So many people have now had their borrowing capacity slashed where they could have borrowed 400,000, now can't even borrow 250,000. It is such a concern because the truth is that if you're out of the market now, when it comes to something like real estate, you might not actually be able to come back into the market for another 12 to 24 months. Can you imagine how much will happen in this market, especially with the new housing budget? I made a detailed breakdown of what the budget here in Australia means for housing. Definitely go check out that video because I'm telling you, your perspective on investing in real estate in Australia is going to change, because when I was researching it, I'm like, holy shit. I hope you guys have enjoyed this video. There are always going to be risks. There is always fear in the market, and there's also so much hopium in the market. What you need to do is figure out a strategy for you in line with your risk appetite so you can go ahead and make the right decisions long term. If you have enjoyed this video, smash that like button and subscribe to the channel because I bring out videos every single day. Thank you so much for watching, and I'll catch you guys in the next one. Thanks guys.